Edinburgh, representing Commissioner Cavan.
Allison Hirsch, representing Controller Brad Lander.
Sean Dorset, alternate designee for Control Brad Lander.
Steve Meyer, I'm an invited participant.
Brian Berge, representing Mayor Eric Adams.
Kevin Lear for Finance Commissioner Black.
Arthur Regner for the PBA.
Chris McGrath, PBA by invitation.
Rob Appling, Wilshire, by invitation of the trustees.
Mama Candace Wilshire, and present by invitation of the trustees.
Jason Schwartz, I'm the president of Wilshire, invitation by the trustees.
Leah Again, Chief Client Officer at Wilshire, here by invitation of the trustees. Nicole Jambrisi, Police Pension Fund, present by invitation of the fund.
Jeffrey Ward, Detectives Endowment Association.
Lou Turco, Lieutenants Benevolent Association.
Johnny Ramirez, Captain's Endowment Association.
Bob Sensky, State Pension Fund, present by invitation. Also present in the room.
Leon Joplin, Controller's Office, present by invitation.
Ashley Lee Garcia, present by invitation.
And also present, SBA.
Anthony Borelli, SBA.
We have the Actuary's Office, I believe.
Mark Tuskevich, Office of the Actuary, by invitation.
Good morning, Eric. Law Department.
Do not believe they're participating.
All righty. And the numerous members of the BAM staff are also present.
Yeah, and we will, to that end, Bobby, we will ask that any BAM staff that participate in the meeting identify themselves for the record, if and when they speak.
All right. And I think that does it, John, so I will hand it on over to you, sir.
Great, thank you very much. So we have just two quick items in the public session, and then we'll go into executive. So we'll start off the public session with comments from the Chief Investment Officer, Steve Meyer.
Great, thank you. Good morning, trustees. So just a quick update on preliminary performance to the end of July, actually to July 25th. And more importantly, looking at fiscal year end for 2023 performance. Maybe just a couple of quick comments to provide some context. The U.S. and global financial markets have held up pretty well over the past few weeks since we last met. In the U.S., stocks and bonds actually have rallied on expectations that we're nearing the end of the Fed's rate hiking cycle. In fact, I was reading this morning, the Dow has actually rallied 13 days in a row, which is the first time they've done that since 1987. The expectation that we're near the Fed's end of their cycle is supported by a few things. Firstly, we've had below estimate job growth, non-farm payrolls in June, and downward revisions for the prior 2 months. Notwithstanding those comments, we still have an unemployment rate of just 3.6%, which is still low. We've had headline CPI come down. Last month it was 3%. Remember that was at a high of June of last year at 9.1%. So the Fed's actions have actually taken hold and reduced inflation, although core inflation is still sticky at about 4.8%. We've seen consumer spending and housing moderate to a great extent, although the retail sales have still been relatively resilient. And lastly, we've had Fed rhetoric indicating that we're near an inflection point in terms of their policy, while likely remaining higher for longer. The Fed did follow through yesterday with its 11th rate hike, increasing its target rate to 5.25% to 5.5% range. And there are potential expectations for another hike as early as September 20th. But any further hikes will be certainly data dependent. So the financial markets will now be focused on the next two non-farm payroll reports, the CPI, the PCE core inflation numbers, et cetera. With the Fed nearly done hiking rates and the UK and EU still late raising rates, we think that they will see the US dollar continue to weaken and expectations for a changing interest rate differential. We actually see evidence of that in terms of the reduction in the value of the dollar. And as a side note here, we had the ECB actually raise rates again for the 9th time this morning, raising their rates to 4.25%. Inflation there is still high, and they did represent that it's above target for an extended period, and that they are open-minded to potentially another rate hike in September as well. U.S. global growth is slowing, as it is around the world. The Eurozone is now in recession, and the UK is also in a recessionary period of contraction. China's second quarter GDP came in below expectations, with youth employment there, 16 to 24-year-olds at 21%, which is a problem for that government. There are expectations that the Bank of China and the Chinese government will enact stimulus programs to reinvigorate that economy in the coming weeks and months. And the last note I have here is that the U.S. yield curve continues to be inverted, almost 100 basis points, which indicates that either a recession is coming or perhaps there's a soft landing that's being orchestrated by the Fed. In terms of preliminary returns, John, I believe we need to do that in executive session.
Correct. Well, I believe so, as they're on order.
Yep. I can actually reflect, we do have audited statements for the fiscal year end, again, ending 6/30/23. It came in at just 8.1%, I shouldn't say just, at 8.1%, which is a positive number. And that's 110 basis points above the 7% actuarially assumed rate of return. So a positive outcome for a challenging year of 2023. John, with that, I don't think I can make any more comments in
public.
Yeah, public session.
That's correct. Yeah. So that concludes your.
It does, John.
Okay, great. So we have one more item for public, and I'll turn it over to Rob Appling to make some introductions.
I was just gonna say, did you want to go into executive and get you any questions about Wilshire, or just, is it fine to do it in public session?
I think we could start in public,
And then-
and please feel free to stick around for the early part of, or at least the early part.
Thanks, John. I appreciate it. Thank you guys very much for allowing us some time on the agenda. I'm joined today by two friends and colleagues of mine and executive leaders of our firm, and I couldn't be more thrilled for them to be here today. You know, since Steve started here, he's really tried to increase transparency and communication and work better and more effectively together. And in that same vein, in that same spirit, we're trying to do the same thing and make sure that this New York City Police Pension Fund has a direct line into our executive leadership and always knows that the New York City Police Department is top of mind at Wilshire. And so I'm thrilled to introduce Jason Schwartz, our president, and Leah Emkin, our chief client officer. And I think one of the reasons I'm so excited to do so is because I've worked with them for a long time. I know that Wilshire has got new ownership in terms of private equity, but Jason's been leading our firm effectively for many, many years, as well as Leah. And so it's nice that we have new growth initiatives with our new private equity partners, but it's also nice that we're staying true to our heritage as a world-class investment consultancy. And I think the fact that Jason and Leah have been with the firm for so many years really speaks to that.
So given that we're going to touch upon the private equity piece,
okay,
it probably is more likely appropriate to go into executive session.
So I made it 2 minutes, John.
No, I think that was a perfect segue.
Yeah.
You know,
Good. Okay.
I think that is actually the perfect segue.
Yeah.
So with that, in order to continue this discussion, I'll make a motion that we enter into executive session.
All right, second?
Second.
Second, LBA, okay. Today we heard from trustees and recommendations from our advisors and from BAM staff in regards to 4 presentations plus 1 presentation that was laid over from last month. The results of that will be made at the appropriate time.
Thank you. So with that, I'd make a motion to adjourn.
I second it.
All right.